Trading volume refers to the total number of shares, contracts, or lots traded in a financial market during a specific period. It is one of the most important indicators for analyzing market activity and trader interest. In simple terms, high trading volume means more participants are actively buying or selling, while low volume indicates reduced interest or indecision. In the context of binary options or any other trading format, volume helps confirm trends, identify reversals, and signal possible entry or exit points. For example, if an asset is moving upward on high volume, it suggests strong buying interest and validates the upward trend. On the other hand, a price movement on low volume may indicate a lack of conviction, and the trend may not be sustainable. Traders often use volume alongside other technical indicators to make more informed decisions. Volume spikes can also be signs of upcoming volatility, especially near news releases or economic events. During such times, volume can jump significantly as traders react to new information. This makes it useful not just for trend confirmation, but also for risk management. Many traders avoid entering positions when volume is unusually low because price can be more erratic and unpredictable. Volume is also used to spot breakout opportunities. A price that breaks above a resistance level with high volume is more likely to continue in that direction, while a breakout on low volume may quickly reverse.